Welcome to Parkbench Tutors. For more information about Parkbench Tutors, you can find us at parkbenchtutors.com or look us up on Facebook. In this podcast we are going to look at documents involving banking and how they interact with the business. So, what interactions do we have with the bank? Well, we've got some which include these documents: cheques, paying in slips, and bank statements. Those are the most important documents which are concerned with interaction with the bank. So let's start with a nice simple one, writing a cheque. Yes, it still happens. Here we have a typical example of a cheque. So what information does it have on it? Well, the first piece of information is here, and it's the name of the payee. The second piece of information, the amount to be paid out, written in words. And then the same amount written in numbers. The date when the cheque was written, and the signatory. So those then are the 5 pieces of information that you should be able to find on any cheque that is received by the business, and they are the 5 pieces of information you put on a cheque that you write. Now, when we pay money into the bank, we complete what's called a paying in slip. And here's a typical blank slip, and you can see it includes space. The stub on the left is for a summary, the date, the cash, the cheques, and the total. And the details again on the right: the date, the number of cheques that are being paid in, the account, who's paying it in, the details of sort code and account number, and again cash, cheques, and total. So we need a breakdown of that, and that's usually on the reverse side of the paying in slip. And the reverse side normally has a space to show the breakdown of cash, 50, 20, 10, £5 notes, and £2, £1 coins, and other coins, and space for the total. And on the other side, on the right, where you can write the details for each cheque, in other words the amount for each cheque that you are paying in. Now let's look at the bank statement, the last of the documents. And the main thing to realise straight away is that bank statements are very often presented from the viewpoint of the bank, not from your own viewpoint. So if I pay £1,000 into the bank account for a business, my view is that I've got an asset of £1,000, so I'm going to debit my accounting system with the £1,000 that I have as an asset. The bank's view, of course, is exactly the opposite. They've got a liability. In other words, they owe me, or owe my business, £1,000. So they credit my account at the bank to reflect that £1,000 liability that they have. So it's rather like, if you like, a mirror image. So here's my view for a few transactions with the bank. I deposit cash, so I debit. I pay an electricity bill, so I credit. I receive and pay in a cheque from Tom Smythe, so I debit my cash account. So I have a balance of £11.90. The bank, on the other hand, sees it the other way around. It receives £1,000 cash, so that's a liability. It pays out £60 to the electricity company, so that reduces the liability. Then you pay in the cheque from Tom Smythe for £250, which increases the liability, and at the end you're still going to have the same balance of £11.90, except that your view is that it's a debit of £11.90, the bank's view is that it's a credit of £11.90. Here's a typical statement then from the bank, and this is from the bank's viewpoint. So what type of transactions are reflected in this bank statement? Let's just go through a few of them. The very first one, received cash, is a credit. In other words, that reflects £1,000 of cash paid in. The £60 to the electricity company reflects an amount paid out to the electricity company. The Tom Smythe one, a credit of £250, represents a cheque paid in. The standing order for £50 represents money paid out. The telephone company for £150 is money paid out. Then you have just a series of cheques paid in, and that comes to £4,870, and so on. And at the end of the day, the balance is £5,780. Many businesses these days, in fact, use online banking. So what does online banking allow the business to do? You may use online banking yourself for personal banking. So you can see your bank statements each day, see them any time you want for 24 hours of the day with most banks. You can arrange payments to suppliers. You can transfer money between your accounts, and you can set up standing orders. Now, you can't set up direct debits, but you can set up the standing orders. And you can also, if you wish, download bank statements, and some software for accounting even allows you to reconcile statements directly with the bank. So what security do we need for online banking? What we normally have is a username and password protection. These days we usually require rather more, so we have security software as well, and these record at the very minimum the number of attempts made to access the details, the number of blocked attempts, and whether any attempts have been made to take screenshots. And you may well have that sort of software on your computer at home for personal banking. Rapport is an example of that. So what are the risks of online banking? Well, there is the risk that the password might be stolen, and if the password and username are known to someone else, then it allows movement of money out of the account. That ends this short session on banking, brought to you by Parkbench Tutors, narrated by David Hopcroft. Thank you for watching and for listening. We wish you success in your studies. For more information, look us up on Facebook, or you can visit parkbenchtutors.com.